Markets are ripping right now, led by NVIDIA and Bitcoin. First, NVIDIA had its earnings report yesterday, and it beat pretty much every metric, and its revenue was up almost 100% from the prior year. I think it was 97%. This goes to show you that NVIDIA is still growing very rapidly, even at this size. NVIDIA is the largest company in the world, and it's likely, and according to Dan Ives, will hit a $4 trillion valuation sometime in 2025. Look, the reason why, at least in the pre-market, NVIDIA traded a little bit down was that NVIDIA didn't meet its most optimistic guidance. But it looks like today NVIDIA is trading up. NVIDIA is about 1% up, about 1% an hour before the close. And look, this is slowing revenue growth than the prior quarters, but we're still seeing NVIDIA grow very rapidly still. The AI story is still getting started. We're in the first or second inning, in my opinion. And for NVIDIA's Blackwell GPU chips, Jensen Huang said that demand will exceed supply into 2026, and that's what I wanted to hear. There's so much demand for their latest Blackwell chips. They're more efficient and less energy intensive than the prior year's Hopper chips. NVIDIA keeps disrupting itself by better chips and better products every year. This is a company where if you spend every dollar spent in NVIDIA's chips is an 8 to 10x multiplier throughout the technology ecosystem. And I think next year will be, well, starting even now, this quarter and into next year will be the software beneficiaries from AI. And I think there's a lot more to it. There's also power providers to AI will have a huge benefit as well, in my opinion. And then Bitcoin hit about $98,000 because, as I said earlier, we're entering the banana zone. This is the period where Bitcoin goes up pretty parabolically. This happens every 4 years since Bitcoin really started, and it usually aligns with the fourth quarter of a new presidential election, combined with the liquidity cycle in the economy and debt refinancings. And as there's more money supply, more liquidity in the economy, which usually happens about now because of election time, there's a lot of promises for spending, there's more debt and currency debasement, and as a result, Bitcoin does very well. It goes up pretty parabolically. So that's what the banana zone is that I mentioned in my video yesterday. We had Gary Gensler, the current SEC chair, talking about stepping down January 20th. And he was kind of hostile to crypto in terms of regulation by litigation. He wasn't really trying to provide a clear path forward for crypto companies to come into compliance. He was more regulating them by litigation, making it very difficult for them. So the fact he's stepping down and Trump's likely to have not only a pro-crypto SEC chair, but perhaps a cabinet position of like a crypto czar. And a crypto cabinet level position will likely be an expert in crypto as well as a policy liaison with Congress. So I think that'll be very important for the industry. So that's good news. And yeah, Bitcoin will likely hit 100,000 in the coming days. And I wouldn't be surprised by the end of this year if it hits 150. That's my opinion. And at the peak of this cycle, maybe the first or second quarter of 2025, I have a feeling it could hit 250,000. That's where I think it'll max out this cycle. Look, there's analysts that are saying it could be 500,000, a million, just this cycle alone, due to all our debt that we're taking on, and Bitcoin's a hedge against that. It's decentralized, it's censorship resistant, it's no point of failure, it's a chaos hedge. In fact, Bitcoin actually gets less risky the higher the price it goes. Because the higher the price it goes, it shows that it's becoming a more mature asset class, there's more adoption. So, and people get more comfortable with it if they see there's more adoption and there's a clearer path towards regulation, a friendlier regulatory climate. And it's a good currency debasement hedge, as there's a lot of inflation or money printing. Bitcoin usually does well in times of that. I wanted to talk about yesterday's stock market sell-off quickly for a bit. That was really about Target earnings. Target's their forecast and their revenue and earnings per share kind of missed. But I think it's also more of a Target problem than an industry specific problem. Walmart did very well. So it was a tale of two cities. Walmart hit, I think, a record high, and Target hit a 52-week low. Walmart people are penny pitching a little bit more and buying more like paper towels, groceries. Target, on the other hand, is a little bit more like home decor and furnishings and clothing. So Walmart's capitalizing right now in a slowing economy for consumers with those essential goods. Target also said that they kind of, due to the port strikes, they kind of had a little bit of too much inventory um, ahead of time. So they kind of, because of that, they said that that kind of affected their earnings report as well. But people were spooked. Look, Target is a big retailer, and if they didn't do well, that's why I think the market did poorly yesterday. But you got to look at Walmart. Walmart's an even bigger retailer, and is capitalizing on more consumer necessities, more groceries, and like paper towels and stuff like that. So I think Target's earnings, that was just company specific, not industry specific, and I think the economy has more room to run, in my opinion.